Well, US markets closed, largely lower and sharply lower in trade yesterday. When I'm looking at the Dow, down 1.56%, the S&P 500 also down over 2%. Mind you, the S&P 500 was up 1% in early trade, so a swing of 3% is what we've seen whipsaw in the S&P 500 in trade yesterday, and that's been the trend for US markets through yesterday. And that's largely because the US consumer confidence numbers came through, and those have come in lower than what analysts, the street, as well as most economists were expecting. So that has kind of led to a bit of a sell-off in US indices. Of course, there is some concerns around growth and consumer confidence in the US, which continue to get aggravated as some of these numbers come out, and that is kind of leading to this unwind in US indices, which saw a rally last week. So some of that is getting reversed at the moment. In fact, the Nasdaq was down around 3% in trade yesterday, so clearly seeing a bit of a battering all these US indices. When I'm quickly moving on to where Europe stood yesterday, well, Europe was in the green, but that's largely because the consumer confidence numbers had not come out till Europe had closed, and we did see the DAX gain around 0.25%, the Stock 600 also up around 0.25%, and the FTSE was up nearly 1%, so largely positive from European indices, but we'll have to wait and watch how they open in trade today. Moving quickly on to how Asia is looking in early trade, the negative handover has led to Asia opening in the red. In fact, when I'm looking at the Nikkei, it's down just over 1% in early trade. The Kospi is down over 1.5%. So we're clearly seeing negative cues coming out of Asia as well. The SGX Nifty too is down nearly 1% as we speak. So we're expecting a lower start from Indian indices at least in early trade today. Moving quickly on to commodities, well, oil prices continue to go north. They've come off that $122 a barrel mark. They had come down to $102 last week, but they've moved up equally sharply. It's at $111 a barrel at the moment as we speak. So oil is making a quick unwind and moving north. When I'm looking at gold though, gold is tempered. It's remaining largely flat. It's at $1,822 an ounce as we speak, and that's largely because we are expecting bond yields to start going up, and as bond yields go up, the no yielding gold assets appear less lucrative. So that's what's playing out at the moment, and the US 10-year bond yield is currently at 3.17%. That's largely flat from the US bond yield as well. When I'm looking at crypto, cryptos are taking a beating. The risk of trade is playing out, and crypto currently, Bitcoin is roughly just above that $20,000 mark. Mind you, Bitcoin had gone to $66,000 and it's unwound downwards towards the $20,000 mark. So that's largely how markets are looking. Of course, we're expecting a slightly negative early start at least for Indian indices at the moment as we see it.